So let me just say I started my morning fairly early, drove down this morning, and there was an inch and a half of snow, kind of wet, kind of dark, gloomy in Spokane, got down here at 50 degrees and sunshine. So a bit of a difference, and it's always wonderful to be down here. I've been coming down for the last year and a half on a regular basis. So we have this climatic difference, but there's also a difference in socioeconomic indicators that I'm going to touch on a little bit today, because I am going to compare the Tri-Cities to Spokane. You've seen some comparisons before along the way. And I'll just preface my remarks by saying that since 2008, your population growth and your metro GDP growth, which Asia, I think, has gone over, has been twice as large as the Spokane area. However, or as the economists like to say, on the other hand, it's been a different story the last 2 or 3 years. So I want to explore that different story and see what you think. So my remarks, again, are going to be based on this website, which is more than a website. It's really a product. It's a process that we've gone through for the last year and a half. It's a large online collection of 168 different measures of life in the Tri-Cities, and we were able to bring this to the Tri-Cities, or the funding for the Tri-Cities, thanks to actually an appropriation from Senators Murray and Cantwell. Now, most of the indicators that you'll see today are based on an aggregate view of the two counties combined, but the website always, or most always, is able to provide a county-by-county view, so data for Benton, data for Franklin. And then, as Gary Spanner did tell me when we started down here, he says, Patrick, it's not called the Tri-Cities for nothing. We got to do the cities too. So we have, very often, we had the data for the 3 individual cities. Now, as the name suggests, trends, all this information is tracked over time. And then it's tracked over time not only with your measures, but also with those of the U.S. or those of the state of Washington. So I just want to emphasize that Eastern Washington University didn't choose these. These were actually the result of a fairly elaborate community process, focus groups, votes and the like. And I just want to thank all those who participated in the process. We had about 175 community members do that. And I think there might be a couple in the room who were a part of that. And then I also want to thank the funders, as Mike mentioned. It's actually a collection of about 16 different organizations in the greater Tri-Cities area that are doing this. And you can see their names, and if you want to take home with the URL, we have brochures on the speakers table. Okay, so I was asked to give a forecast, and I think any economist who engages in that business is really putting his or her neck on the guillotine, because it's not easy to do, especially it's not easy to do at the local level. So I'm going to say I'm not going to give you any sort of forecast that's based on statistical work. That's really something that the trends don't provide. But I will make some stabs at predictions for 2016 in some general way, based on what we've seen here in recent history. And if anybody wants to if there's somebody from higher ed here who wants to go a little further, believe me, there's lots of data one could use to make some extrapolations. And since this is Tridec, I'm going to be talking about just 2 parts of the site. But okay, so this is the growth rate for the 2 counties. I mean, sorry, the growth rate for the 2 counties. The most recent count, which is an estimate in 2015, puts you at 276,000 right here. Right there. Now let me get rid of that and just look at the growth rates. And I think you've seen these from Asia, but let me just give a little deeper dive in these. So the convention here, if you can see the colors, is the blue line is your community, the green line is the state of Washington, and the black line is the United States. And you can see that the blue line in almost the entire, except for the 80s, that we've tracked is way above the benchmarks. So for 25 years, your community has had exceptional growth. Growth that I might add is unique among all the Eastern Washington metros that we track. However, the last 2 or 3 years, you see the decline towards the benchmarks. And right now, the most recent period, it's basically equal to the state and below that of the state of Washington. So I guess one of the questions I have is, what's happened? Well, let's go to something that is a major component of growth, population growth. And we have births and deaths, then we also have in-migration. When I saw this recently, I was rather surprised, and you might be too. So we'll go to this indicator. So these are, the bars give you just the net effect of migration in your communities, and this is for the 2 counties combined again. The blue line tells you as a percentage of population. And you can see the most recent year, which is the year between 2014 and 2015, you're at 0. So you had 0 in-migrants on average, on net, in those 2 years. And there's been a rapid decline in your migration patterns. So again, I've got some ideas why this might be happening, but something you might be aware of. So the population growth you have been receiving recently is basically due to a surplus of births over deaths, but not due to in-migration. Now, I checked the state of Washington's forecast for the 2 communities before I put these notes together. And for 2020, the state is projecting you're going to gain about 26,000 people. So that's a pretty strong increase. I'm sorry, for 2025, you'll gain 26,000 people. It's about equal to the average growth rate of the last 3 years, which is 1.7%. But my question to all of you who are perhaps from cities or perhaps from county governments is, where are those 26,000 souls going to land? Is it going to be on this side of the river? Is it going to be the other side of the river? And what jobs will they take? Assuming that a good portion of them will be of working age. So I don't have any answers for that, but I just want to point it out that that's a fairly hefty number, 26,000 folks that will be among you in a not too distant future. The second demographic item I'd like to highlight is something that I know is not unique or not is that I know is somewhat widely known to almost everybody in the room, but I'd like to just drill down a little bit. And this is your rapidly growing minority population. So this compares on the right in black and shades of gray, the US, green, state of Washington, and blue, your community, of the Latino population plus other or non-white population and the so-called mixed race category that the census has been tracking now for about 20 years. And you will see that on total, the minority population of the Tri-Cities or the Benton and Franklin counties is higher than that of the state, which is fairly remarkable, I think, and is approaching the levels that we see in the US. And so you have gone from about 30% when the trend starts in 2006, when we're tracking that, to 37% in 2014. And I think we can all talk about the consequences of this, but I'm an economist, I'd just like to echo what my favorite magazine, The Economist, said a year ago this month about the consequences of this, especially Latino growth. He said, basically, The Economist said, this is a demographic dividend that very few countries in the world can look forward to. So you might want to think about what this demographic dividend will mean over the next 5, 10 years to the Tri-Cities. And it seems to me, prediction, this isn't too hard one to make, that is only going to go up. that share, and that we'll be looking at a share probably by 2020 of at least 40%. So what that will mean, I think, is generally quite positive. Now let me dive into a couple, 3 economic indicators. And I know that you've seen one of these before, but I'm going to give you a little deeper dive. And this is income. Okay, so blue line, Benton Franklin, black line, US, green line, the state of Washington. Per capita personal income, as you may have heard, is taking all the income that basically the IRS tracks and divides it by every man, woman, and child. So it's different than median household income. This is an average, and it includes babies and includes people who are retired. And I think you probably understand a bit of the importance, but I would just posit that it's great to have rising population growth as you've had, but if the per capita or the per person rate isn't going up as fast as you want, then you might want to ask yourselves why. And indeed, that's what's happened here. This most recent rate, about 37,500, is really the lowest among all the metro areas in eastern Washington. It's lower than Spokane by a couple thousand. It's lower than Walla Walla by about 4,000. It's lower than Wenatchee by a couple hundred, although you are a little bit higher than Yakima. In addition, the growth rate, which I think you covered, Asia, has been actually, recent growth rate has been quite slow. So just cumulative growth from the peak, pre-recession peak of 2008 through this most recent year, 2014, for the Tri-Cities has been 8.5%, for the US has been close to 13%, and for the state of Washington has been 12.5%. So what's gone on? What's happened? And again, I don't have too many answers, but I'll say, first of all, in communities where there is a large non-working population, the per capita personal income is lower than places where there is a large working population. So you think about what's going on here with rapid growth from young people, from births, and that's certainly a reason. I'll show you real quickly. So blue line, Tri-Cities, green line, the state of Washington, these are kids. This is the share of your population that is 0 to 17. And look at the difference you have here. There is no other community, there's no other place in eastern Washington, and we have several of these projects, that has this big a gap. So you have an incredibly young community, and that's one of the reasons your per capita income is as low as it is that not too many of these people, 0 to 17, are out there working. But I would just say, and I'm going to get to this as I wrap up here, there's a couple other reasons that might be going on, and I just want to see what you think. But let me take you to some good news, and this is your taxable retail sales. So for those of you who are in government, local government, you must know this already or be happy about it. So as you know, in the state of Washington, we actually tax a lot of things that other states don't tax, and yet of course we don't tax certain things like food. And to some degree, then, this serves as a proxy for how things are going economically. And you can see that for most of the recent years, the blue line, which is the growth rate of your taxable retail sales, has been above the green line. But even more importantly, this number, 4.5 billion, is a huge increase over the start of the series. So that cumulatively is a 22% growth, 23% growth rate, which is higher than any other metro area that we see in eastern Washington. And I said it's higher than the state, except last year. So what happened last year, or 2014? I don't know. Very often, some of these numbers are driven by construction projects because we do tax construction. Now, the good news so far from the data that I've been able to see from the state is that you had a good year in 2015. You're way up for the first 2 quarters of the year in taxable retail sales, and I don't think that trend probably faltered too much. So the question is, what about 2016? Well, I think 2016 will depend to some degree on your job market, your incomes, and we'll see what tourism brings. Tourism is always sort of a wild card, and if tourism is strong, which could very well be, then you could have an outsized impact. But I think it's safe to say that the Tri-Cities continues to serve as a retail hub, and you're probably, well, we know you are, you're attracting dollars from outside the two counties. Okay, how am I doing on time? Okay. I want to show you now another conflicting signal, and this was a little surprising to me. And this is looking at your wages. Wages are the largest part of per cap or of personal income. So personal income is wages, dividends, and rents or investment income, and transfer payments from the federal government. And usually wages are about 57% of personal income. So we're going to look at the trend in the average annual wage. This does not count the self-employed, but this is I think, a very good indicator of what's going on the labor market. Now, we deflate this, which I'm not going to spend time on, so I will just look at what we call the nominal wage or the non-inflation adjusted wage. And you can see the green line, which is the state of Washington, continues to go up pretty steadily. And yet the blue line peaked 2 or 3 years ago and went down, actually. And I've asked my staff to check it once, check it twice, check it 3 times, because we don't see this. We always see nominal wages going up, but since 2011, this has gone down. And since 2008, your growth rate of your overall wage has been about 10%, but this has been the slowest among all the metro areas in eastern Washington. So Spokane's been at 16%, Chelan Douglas has been at 14%, Walla Walla has been a little more than Chelan and Douglas, and the state of Washington has been 18%. So something's going on here. This is typically a reflection of the supply and demand for labor, and I think it has lots of consequences, which we could talk about, that find themselves in the political sphere, whether it's the national or whether it's local, if people's wages are not going up. Were I to deflate this and leave those inflation-adjusted numbers in there, you'd find flat lines or even more declining lines recently. So to some degree, this tells me you need to talk about the mix of industries and sectors you have here, and but that's talk for another day. We would obviously like to see the average annual wage go up in the level in the range that the Federal Reserve is looking for. The Fed is looking for wages to go up between 2.5% to 3%. I don't think that's going to happen this year, though. I think the trend is you're going to see wages go up in the Tri-Cities maybe between 1% and 2%. And so we'll have to see whether I'm right or wrong when we meet again. I'd like to finish my talk by focusing on something that you may not typically see at an economic development seminar or session like this, and that's education. I don't think you can separate, and I'm not saying this because I'm in higher ed, I don't think you can separate education and therefore workforce issues from the prospect of having a more prosperous community. So I want to, and I know that this community has looked on with pride at what's happened with the Tri-Cities WSU campus, and I applaud you for pushing that. Just like Spokane has pushed for the medical campus in downtown Spokane. And I'll tell you that Eastern is paying close attention to all the good things that are happening at Columbia Basin College. So let's just wrap up by seeing what the status of education is for the two counties. I'm going to look at 2 metrics. One is the BA and above one. So this is the share of the population with a bachelor's degree or higher the share of the adult population. Let me move this up a bit. And I guess to my surprise, you are lower than the state. And perhaps my surprise was conditioned by the work I've done with P&L over the years. And I maybe extrapolated, and this is why data are good, indicators are good, because it's a little bit different. The bottom blue bar is those with a BA, the share of those with a BA, and the lighter blue bar are those with something higher than a BA. And you can see on that score, the Tri-Cities are basically below the state and below the US. So that's just an information mark. You are, compared to Spokane and Walla Walla, you are a little lower compared to the other metros throughout Eastern Washington. You're about the same. Now let's look at the final indicator, which is your community college. Here it's a different story. Look at how much higher the blue bars, the blue bar is than the state, which is also higher than the US. So it tells me a couple things. It tells me you've got probably a strong, very strong community college system here that people take advantage of. And it probably tells me that given the economy you have, which has been strong, this probably is a good reflection of the skills or the human capital you need. I'll just leave you with a question, and I don't know where you're at with this as an organization, as Tridec, is what your aspirations are for something more technological. But I know that you have a tech park that people are proud of, and it just seems to me that you have a great mix of your workforce by education for your current economy, but for the economy of the next 5 to 10 years, do you have that workforce set up with the right degrees? And that could be the right BA degrees, or it could be the right community college degrees. So I'll just leave it like that, and I hope I've provoked and sparked some questions. You can look at the trends online anytime, any time of the day. So thank you so much.